So now let's talk about the 14 hyper elite digital theories for you to win your live trade. So what is a theory? First of all, we need to define what is a theory. A theory is a well-supported explanation of some aspect of natural or social world backed by comprehensive evidence, repeated observation, and tested hypotheses. The most important thing in this sentence is repeated observation and tested hypothesis and well-supported explanation. By the way, the way I did to develop those 14 theories is by raw observation, like daily, spending my days on the chart daily, observing the market, observing the market, observing the market, observing the market. And then I realized that there are some things that repeat themselves over and over. And then I made some logical thinking about that. And then I wrote those principles, right? That's why I can prove everything that I do. Because in rigorous field like the science, a theory represents the highest tier of established knowledge rather than unproven hunch. Yeah. So basically what I did is that, right, I structure everything that I saw in a way that somebody can use it not only for analysis. It's not for analysis that I created those theories. It is for raw trading, pure trading, like raw trading. Raw trading is what? Buy and sell. That is raw trading. Buy and sell. For you to reach to the level that you buy and sell, and those buy and sell are super positive, you need those theory. So master the art of trading and stop focusing on the money wanting to be right. Like, the thing is that when every beginners or even intermediate traders, those who know a little bit what is going on the chart, they are still focused, too much focused on the blue result on MetaTrader 4, on MT4. They are still focused on that. They are very focused on blue result, like your profit in a trade or your losses, red and blue results. They are focused on seeing influencers winning and making money. If you are too focused on that, when you go to trade, when you go to buy and sell, you will want your result, your personal result, right? Your personal result to look like the positive result of your influencer. And you will not trade with the mindset of you having a process, as I told you. You will not trade with the mindset of having a process, but with a mindset of reaching the same level of result like your guru. And that will be a very bad mindset. And that mindset is called, I want to be right. You being right means that you want to win. Meanwhile, you need to follow a process, right? So stop focusing on the money. Stop focusing on the cash. Stop focusing on what you see on your influencer guru. Focus on the chart. Focus on the process. Because even the chart doesn't give you the process. You need somebody who has made the process for you and you use it. Read rate beat the win rate all day. I mean, right? All day. I said it already, but I will repeat it again. Read rate beat the win rate all day. Read rate beats the win rate all day. Beat. Is that right? Beat very well. Yeah, with S. Beat the win rate all day. Your strategy win rate is between 25% and 75 and 70%, right? That's your strategy win rate. But let me tell you, if your strategy win rate is this, it means that your lose rate is 30% to 75% losing rate. So you also have a big margin of losses. But how to avoid those losses? How to not be in the side of the loss or identify the side of the loss and avoid trading during the side of the loss? You need, the only thing that you need is to have the ability to read context of the market. Read context very well. Your ability to read different contexts of the market and being on the right side of the direction and on a good point of the timing, the direction and the timing, that will beat those losing percentage. That will erase totally those losing percentage, and you will only be winning. So that's why read rate beats win rate all day. Strategy, a backtested strategy win rate means nothing. I didn't backtest no, I backtested my strategy. My strategy is called KSB. The strategy that I gave you at the beginning, I backtested it. But after that, I didn't use any strategy anymore because I realized that even my strategy were having a percentage of losses between, because my strategy win between 50% of the time and 80%, right? So it means that I'm losing between 20% and 50%. It's still big. It is still big as a loss. So I started hating. I hate the fact that I hate losing. I hate the fact that I can lose. I hate the fact that it's possible to lose. So I joined. What I did is that, right, since I hated the fact that it is possible to lose, because for me the possibility of losses is, I hate it so much. It's so, for me, I don't see how it's possible to lose on in a game where you are the goat of your own world. Why losing is normal? For me, losing is not normal. This percentage is not normal for me. Maybe for some people it's normal, or 20, 50. No, for me, it's not normal. You need to have the ability to avoid the losses. Losses exist, but it's not normal for your skills, for your greatness. You get what I mean? It's not normal. So that's why I focus myself on reading every context of the market, because I realized that I lost only because I didn't read the context of the market that made me lose. That's why I stopped using a strategy. No strategy. There's no strategy that will make you confident at 100% on every time. No. Strategy by design have a losses. A losing trade affects your emotion, affects your feeling. You are a human. So for you to avoid those losses and be on the side of the win always, you need to read the context where you can lose and trade the context where you win. That's why the read rate beats the win rate all day. Most strategy out there focuses solely on survival risk management, 1% per trade, combined with 25, if they are 25 to 70% backtested win rate strategy to be profitable. That's true. Most strategy says that, okay, since my strategy win between 50% and 80%, let me put 1% per trade. Even if I lose 2 times in a row, I will lose 2% in 2 trades in a row, right? In 2 trades. But when I win, I have a risk reward of 3, and I win 3 times in a row, right? With a win reward of 3, then I have 9% profit. So if I remove the minus 2%, then it remains me 9 point, it remains me 7%. 7%. So I'm still up to 7%. Okay, I'm good with that. You know what? I'm good with that. But the underlying issue is that there are people, traders, who start trading with $10. And you know that when you open a position with $10 with a lot of 0.01 lot, that represents 40% of. So I was saying that I am agreeing with the fact that um, um, if you win 3 trades in a row, you make 9% of your capital minus the 2% that you just lost, you are up to 7%. That's good. But there are people who only start with, we start with $10 to trade with. And when they put on MetaTrader 4 a risk of 0.01 lot, that represents 40% of their $10. I mean, it means that if they lose during the 30% to 75% strategy loss, if they lose, their account, their trade account, trade capital drop down to $6, and it will be more difficult for them to grow a $6 than a $10. So they go further down because they don't have the choice. They cannot be start risking 5% at $10. $10, 0.01 is 40% of the $10. So the problem, the problem is that if they use only a strategy, only a strategy win rate to save themselves from the rat race, from the brokenness, they must fall into the trap where the strategy is losing that time. So what they need to solve that type of issue, right? To solve that type of issue, to solve the losing percentage of a strategy, is to have a read rate ability, read rate skill, right? You have the read rate skill to avoid trading during the losing period of their strategy and trade only during the winning stage of their strategy, so that they can start making their $10 grow. And also, when you have a small account like that, because you know that your strategy will lose at 75%, may lose at 75%, you are too afraid. You are anxious. You are like, you have the fear of entry. You always think that you will lose because your losing percentage is big. It's because you only use a strategy, and it's not good to use only a strategy. You need to use the hyper elite traders use read rate. They know the context. They know when you will lose. Believe it or not, they know. Hyper elite traders know when a trade will lose in advance before placing the position. And they have the ability to have a decision that I don't trade this one. That's hyper elite. So that's where I'm training you. So so I was saying that most strategies out there focus on risk management of 1%. It's survival risk management to be profitable. But seeing me, I focus on current life graphical movement. That is why what I call reading the context, live, current one, the current life. I solely focus on being excellent to get the correct graphical lecture or the read capacity to hit my capital growth target at any time for a predefined Google Sheet evolutive risk per trade. So what I mean by that sentence is that where I'm focusing on is not on the win rate of my strategy. It's not on the win rate of my strategy. What I'm focusing on is just I have my 14 theories. I use them as a lifeguard, a trading, a capital guard, a capital growth guard, something like that. So I only focus on reading the chart, not on the strategy. My strategy is already inside my blog. It's like I cannot be focusing on something that I already know. Like I know that I'm breathing. When you breathe through your nose, are you focusing on breathing? No, you are focusing on being aware of not taking the type of risk that will make you stop breathing through your nose, right? Now I'm breathing, I'm not thinking about breathing. It means that I'm healthy. It's the same thing with my strategy. I already know my strategy. I'm not thinking about my strategy. Sometimes I don't even know that I'm thinking about it. So where I think most is about reading the context with the 14 theories. That's what you will be doing. That's what you have to do to stop your losing streaks. Then you will be able to perform at your will, when you manage the direction and the Vegeta Ishimoku line timing. You need to understand that, right? If you want to win at your will. If you want to win at your will, like the day you want to win, you win. If you want to win at your will, you need to understand that, right? Direction and timing are the two most important things that make you win. Where most strategy fail, right, is the zone. You may be right about the direction, but the first zone above may be losing, may get broken. Is the second zone below that bring your chart to the upside. So yeah, you are right about the direction, yes, but your timing is so wrong. And if you have $10, you lose that $10, you fall back at $6, and then you start losing confidence in yourself. You start questioning your life if you make this, if you will make it in trading one day. So 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 one thing that I wanted to tell you is also that Vegeta theory means that you trade the volume inside one cycle. You know that the Vegeta Ishimoku cycle that I showed you, I show you the Vegeta Ishimoku cycle. I said that this one is the origin, this one is the reversal, this one is the transition, this one is the new trend. Then you have the correction. Then you have the push trend. So what I said, I told you that is that you will see that if this one is, let us suppose that we are on H4 on this cycle. Kijun will be here like this, right? Because the origin start from the empty space till Kijun, and Tenkan will be coming like this and start bending to the upside, right? That will be on H4. So what will happen is that there is a zone here in the empty space where if you go on 5 minutes, right? If you go on 5 minutes, right? On 5 minutes to trade this zone, you will see Tenkan bending to the upside and Kijun bending to the upside too. So those two volumes, you remember that I told you that a volume is the cross between two lines of Ishimoku. So inside um, this this origin cycle, you have inside this origin cycle of H4, you have a 5 minute volume inside there. That's the 5 minute volume that you are trading, that you're actually making profit out of. That's the goal of the 14 14 Ishimoku vegetation for hyper elite trader who want to win at their will. So you have that's the goal. So for example, I said here, for example, pick a daily cycle. Example, the reversal cycle. Let us say that we pick this reversal cycle, this one. This reversal cycle, right? This one on daily. Mm. And pick a daily zone in that reversal cycle to start trading the volume from there. Let us say that we pick here on Ishimoku, on Kijun, Kijun inverted, something like that, Kijun inverted. We start trading to the upside, right? And then go down on H1 and trade the TK cross and the KSB volume. So the goal is now to go inside this zone of daily Kijun inverted to see what the TK cross. So inside a daily Kijun inverted, you go on H1 to see a TK cross this way, bending to the upside, and then you'll be trading this TK cross, then trading the KSB cross too. That's what you trade. You trade it till Tenkan comes here above on SSB daily and bend down. Even Kijun come and bend down and cross below. That's how you trade. So inside a cycle, you trade volume. That's the goal of Vegeta Ishimoku cycle. That is the goal. The way you earn money is by this way. So Vegeta definition. I will give you a definition of what the cloud Ishimoku cloud is. What Ishimoku is that, right? You have Tenkan going. You have Tenkan going up like this. Oh, man. You have Tenkan going up like this. Oh, what? Why my mouse is acting crazy like this, nigga? And then you have Kijun going up too, right? Then you have SSA going up. Then you have SSB going up this way. So what I will show you is the most important thing for you to remember about Ishimoku. The cloud that you see here, the cloud and the TK cross have different roles. Cloud is like a it's like a spring. A bouncing spring. Or it's like a bouncing like this one, like this bouncing spring of Captain America, or a trampoline, or a trampoline where the price will fall and be ejected to the upside. You get what I mean? That's what price is. So that's what the cloud is. The cloud is basically a trampoline, a spring like this. The cloud is a spring where the price move, hit the cloud. When the price hit the cloud, right? The role of the cloud is to act as a spring. Now, what is the role of Ishimoku of TK Cross? TK Cross is now a ruler, a measurement ruler, a ruler that measure the height. The height. I think that's how the okay. TK Cross is now the ruler that measure the height. So the height of what? Of how much your account, your capital is growing, because you will be buying on the cloud like this, and then TK Cross will now give you the gains. TK Cross represent the gains in terms of pips, the gains in terms of pips, right? measured by pips, or in another way, in a metaphor way, um, a ruler, a ruler. Ticket cross is a ruler that measure the amount of money that you are earning now. So you will be leaving your trade go till then can bend to the upside there, then can go and bend to the upside like this, and then bend down. You see. So more ticket cost goes to the upside, the more you earn. And ticket cost is just showing that, bro, you are earning this amount of money now. You are earning this amount of money. For example, What happened on? What happened on? Um, let's take for example what happened here. It happened many times. Let us take this one. See how the price is when it touch the cloud. You want to get away from the cloud very fast. When the price touch the cloud, you want to get away from the cloud very fast because it is a spring that the acceleration, the space of the moving object will be fast after the touch. That's why the cloud is big, because it look like a trampoline, something where the price bounce, and then ticket cross is just showing you how much money you are actually making, right? That's the role of ticket cross. The role of the cloud is to get bounce on it, to bounce on the cloud. You bounce on the cloud, you go. Bounce on the cloud, you go. So it is very good. And now what I want to explain is that where it bounced there, what does it represent? It represents that that's the moment where buyers and sellers agreed of the cheapest price. The cheapest price. Ticket cross now is the representation of their will to make profit. Their will to make profit. So the cloud is an agreement of the cheaper price too, and then that's the definition. So I say the SSA cloud is the buy and sell execution zone, and then the ticket cross is the profit impulse, like the gains, the impulsion of your gains. More the ticket cross goes to the upside without thinking Tenkan bending or Kijun bending like this, more you make money. That is the definition of each one of them. So now let us look at the framework theory. The framework theory, what is a framework? A framework is, what is a framework? A framework are steps that lead you to make money, like a set of steps, right? All of the steps till you make money. What are a framework are all of the steps till you make money. That is a framework. Let us say, for example, in school. In school, you start with primary school, right? Primary school. That is the first step. Then you join what? Is it high school or college? High school. So after elementary school, when I say primary school, it is elementary school. like for children. Then you join what? High school. High school. After high school, you join what? University. You can join university directly, right? After uni, what do you join? You can do a specialization. Maybe you are a doctor, right? Maybe you join a university to be a doctor, like a medical doctor, MD, medical doctor, right? Then you specialize yourself in brain surgery, like specialization, a special training, specialization, brain surgery, right? Surgery, right? Brain surgery. After that, you get a job in an hospital, and that job pays you money. That is a framework. What you have worked, the step that you have worked till you get your money, your payment. So in trading, you must also know the framework in trading. Trading also has its own framework till you get money. First, direction and zones. First, direction plus zone. So you have direction plus zone. That's what you need to find first. You need to work on that first. Then you have entry plus take profit. You need to work on that. Secondly, you don't skip one or do it wrongly. Then you have timing, the timing and the scaling of the position. So when you have the timing and the scaling of the position, then you can receive what? The payment of your work. So that's the framework. That's how you need to work. That's how you need to start. You need to start finding the direction and the zone. That is it. This is the sequence. This is the sequence of the work. It's already established like that. That's how trading works. This theory is based on observation of what I've observed. And I made it a theory. That's how trading works. Those are the big, most principal steps for a trader. A trader who doesn't have it doesn't know how to trade. As simple as that. So now, what are you doing for each steps? For the step of the direction, right? You need to know that you have time frames. You have 3 times frames for the direction and the zone. For you to find the direction of a trade, you have 3 time frames. You have you have 3 times frames. You have monthly, weekly, and daily. But most of the time, I start first. Personally, I start first on 12 months, 6 months, and 3 months. This is for investment time frame. Those are investment time frame. And monthly to daily are swing trading time frame. Because you see my trading view. It has 12 months. You need to start from 12 months because everything starts from 12 months. It is investor who make this price move. Investor make this price move from top to down. So start from 12 months, even though on the document I didn't put it. It's because when you have already analyzed the 12 to 3 months, it is fast and easy. It's not that complicated. Then you spend most of your time on swing trading analysis. Then after that, let me talk now about the zones. So first of all, you find the direction. That is where then you find the direction. Is it an uptrend or a downtrend? After that, you need to find the zones inside those time frame of swing trading, those zones where the price will come and bounce on it. It is from those zones that you will start taking the entry in entry time frames during the second step. So it is like um like what is happening now on on what? Which one can I even take? Yeah, it's like what is happening now on, let me take what? Okay, it's like what is happening now on Nasdaq in a monthly time frame. You know that the Nasdaq is an uptrend, right? But the problem is with the Nasdaq being in an uptrend now, right? The direction. When we find out first about the direction on monthly, the problem with the Nasdaq being during this uptrend is that the Tenkan has already passed inside the monthly VRS. So Tenkan is inside the monthly VRS, it has passed. So candles must drop. So the current direction of the Nasdaq, even though Tenkan is to the upside, but you cannot start buying Tenkan. Price is above Tenkan. When prices are above Tenkan and there is a Tenkan VRS, it means that Nasdaq want to sell now. So you have the direction and the sell and the zone where the direction is to the downside, but where is the sell zone? Where we are now. The sell zone is basically having the logical thinking that Tenkan has hit these various weeks and then you are selling now. So on daily, what do we have? On daily, we have almost the same thing. Tenkan and Kijun has passed the daily. Tenkan has passed the daily what? Tenkan has passed the daily how do I call it? Tenkan has passed the daily resistance on the left with Kijun here, right? So it means that the price want to drop also here, want to drop down. Okay, the max, we will first of all see if the price can drop till this point because that's on weekly. So that's where the price can drop till to up to. So now let me try to erase everything that I just drew because I'm looking at the direction and the zone. Now where the price is now on daily, right? Where the price is now on daily is that on monthly we want to go down. On weekly we want to go down too. But where we are on daily now, daily is just touching a daily zone. Daily is just touching the daily zone now. But since we have moved to the upside, it's not because you touch the daily zone that the daily zone will hold. We touched Tenkan one time, two times. That's the third time we touched Tenkan. So what can happen here on daily? What daily is telling to us is that we are moving to the upside because this is just the third Tenkan touch, right? We are moving to the upside. So, but weekly and day and weekly and monthly are saying that we want to make the price drop now. Since daily Tenkan, this daily Tenkan, this one is not yet bended to the downside like this. Therefore, the current direction of this price that we want to do is not a downtrend. We will not sell. We will only start selling when daily Tenkan will drop down to the downside. Daily Tenkan is not yet to the downside. You only sell when daily Tenkan is to the downside like this, or when the price are above daily Tenkan. Okay, we are hitting the Tenkan for the third time on Nasdaq. So what we must do is that what must happen is that we have this setup, and then we will go and buy. We will go and look to buy it on or 1 hour, but we will only buy when 1 hour will turn his Tenkan to the upside like this. But from what I see, right, 1 hour is saying that we keep going down, and it looks like very nervous to go down. It means that what 4 hour has already started to bend down because weekly is to the downside. 4 hour is now start to bend down to the downside, right? But we cannot sell now on 4 hour. We missed the sell. If we want to sell, we should have sold at this level or at this level on the beginning of Tenkan inverted. So the next time that we can actually sell will be when the price will go up a little bit like this. So now, but for the moment where the price is now, the price want to be bought. I didn't say bought till this point, till the V breaker here. The price just want to be bought. Maybe just till this other green candle. Green candle will go there and reject themselves, then keep going down. So the current where the candle is now is a buy. Is that the direction is the buy, and the zone is this one. The zone is that one. That's what I can tell. So that's it. So now let's look at another thing. How many times per month a zone on monthly can be touched? Let's do, for example, a how many times per month a zone on monthly can be touched? Let us take, for example, a set of 30 candles from where we are now. If we take a set of 30 candles, right, those are 30 candles till this point, till this candle, from where we are till this. So what are zones? What are zones? Zones are when the Ishimoku price touch Ishimoku. Like, for example, price has touched Ishimoku on monthly year. This candle, so this candle to this candle to this one, this one, this candle, this candle, this candle, this candle, this no, wait, not yet, and this one. So we have like 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. We have 11. Over 30 days, we have 11 touch for now. But those are not the only zone for Ishimoku. Remember that you are not using Ishimoku with me. With me, you are using Ishimoku Vegeta, right? And Ishimoku Vegeta says that even when the candles are in the empty space like this, those are also the zones of Ishimoku. So we add up 1, 2, 3, 4, 5, because that's where the price 6, that's where the price has reversed. So you have like 17s, right? 7, 2, 7, 8, because those are the red putback. 8. You had 8, so you have now like 19. So over 30 days, you have 19 times over 30 months. Over 30 months, you have 19 times that the month has had a zone zone of reversal or continuity, because those zones here above the price, above Ishimoku, are reversal, because it make the price reverse to the downside. Even this one, A. So it is 10. So it's not 19, it is 20. So we have like 20, we have like 20 over 30 months, we have 20 zones. So over 30 months, we have 20 zones. 20 zones that have been touched. And if you do the ratio between if you do the ratio 30 divided by 20, it will give you something. No, if you do the ratio 20 divided by 30, it will give you something closer to 0 or 0.7, right? Like it is almost like we can cut the corners and say that it is like it is as if one time per month, right? There is a monthly setup. There is a monthly setup. So if you are entering on monthly, you can actually enter one time per month. That's why I said that there is a monthly zone where you can enter at a continuity or a reversal one time per month. For weekly, for the weekly, for the weekly, you can do the exact same thing. You can basically take like candles like this, and you will realize that, but taking only 30 candles is not enough, because you need to take like 1,000 candles to have an average number of time that you can have a setup per week. But from a realization, like just observation, naked chart observation, you can have per week, per month, how many zones, weekly zone that you have per month. This per month, it is 2 times. Like you see, this Kijun zone were one zone, 1, 2. This one was also another 1, 3, 4, 5, 6, 7, 8, because those are the red pullback. 9, 10, 11, 12, 13, 14, 15, 17, 18, 19. 19 over how many weeks? 19 over 31 weeks. Like you just take 31 bars as 31 weeks. Let us say that like it's 31, even though it might be 33 weeks, because of the way we take the middle of the bar. Let us say 31 bars, right? You have 19. So if you do 19 divided by 31, you have something closer to 0.69, something like that. So, but that is because it is for this period. For another period, for example, if you take the same 31 bars for this period, during the period where you had a lot of candle touching a lot and all, it might be more. That's why I said make it 1,000 bar back test if you want, but I will not do that back test. But per month, you can have those 2 times per month weekly zone. Maximum. That's the maximum, by the way. It's not like the exact. That's the maximum. That's why here you see this one giving 0.6 or 1. So, but the maximum per month is 2. Even monthly, the maximum per month is 1. Because there are some months that you don't have the zone. You don't have the zones. There are some weeks that you don't have the zone. For example, since 3 weeks, we don't have any zone. So that's a little bit the average of maximum, the maximum average. For the daily, you have 2 times per week now. It's no more per month, but 2 times per week that you can meet it, you can have a zone. It means that what does it mean? It means that you can basically be like on weekly be on daily. If you are a daily trader, a swing trader, you enter on daily. You can enter 2 times a week, 2 times a week, 2 times per week. Should I put times with S like this? 2 times. One is 2 times. Or I don't know. One is 3 times. 2 times per week because when I say times, I say times with S. So that's it. That's it. The one thing that I'm saying here is that the candidate that either touch the zone or close within the zone, both are very interesting. Both are interesting. You will realize that, right? Sometimes the candidate just flirt with the Tenkan zone like this one. It doesn't come and close here. It closed above, but it just touched the Tenkan zone out and went to the upside. But other times the candle come and close inside Tenkan zone. I don't have any explanation of the reason why it is happening this way. Sometimes it's close, sometimes it's just touch. And I don't have any meaning. It doesn't mean nothing for the chart. It doesn't change nothing about the direction. What changed something about the direction is the number of times that Tenkan has been touched and the weakness between Tenkan and Kijun. That's what changed. And the fractal, that's what changed something about the chart. But the candle, a single candle closing below above a line, has no meaning. It has no meaning. Yeah, for me, it has no meaning. So let's now look at the entry. The entry now is done on H4, and you can have entry 2 times per day. Now it's per day, it's no more per week. What does it mean? Look for example. Look for example. If on a daily, right? On a daily, on 7 days, on 5 days, because on 5 days like this, because 5 day is 4 bars. If you want to count for 5 day, 1 day, 2 day, 3 day, 4, 5, 4 and 5 day. We are Thursday today. Tomorrow is Friday. This bar that is not yet showing up. So if you want to have 5 days, you need to have 4 bars. And what I wanted to say on weekly you can have, let us say for example, this week you have this one zone, right? That went to the downside, the empty zone, like the empty setup. Then you also have last week you have this zone. You have 2 zones that week, 3 zones. By the way, 3 zones. But I said the maximum per week is two times in average. But if you go at another week previously, you will have like 1 zone, 2 zone, 3 zone, right? 2. But another week you will not have that much of zones. This week, for example, you had only this 1 week you had only this zone and no zone above for the weekly, no zone above because it broke and it went. So you only have one setup a week. That's how you count it. But on H4, what you have is totally is another game. That's how you can plan. That's how you can plan. That's a part of the framework. Like, how do you know that the sequence that you will be using will be winning with you? But how do you know that the sequence that you will be using will be winning with you? You have like you have like 2 times per day. Let me take a day 5 times. I think 5 times, right? A day 24 hour, like this one. This one day. Let me start from yesterday at 2 a.m. Yeah, it's okay. It's okay now. So look, for example, this one. How many times did you have the a zone here? How many times do you have a zone? You have a zone, this zone, and this one. Three zone yesterday. But before yesterday, how many zones did you have? You had only this one to the upside on 4 hour. But before that, how many zones did you have? You had one, two, three maximum. And before that, how many zones did you have? You had that day, this day, one, two zone. So in average, it will give you 2 zones per day. It means that you can have 2 times that you enter in one day. That's already great. That's already great. So in one pair, you have 2 times that you can make opportunity. It's like a client wants to give you money 2 times in one day, or you can have 2 clients a day. That's a great business on only one of your product, and you have many pairs that you can choose. You can choose 5 products. So that's where you can enter and take profit. And it's also on H4 that you enter zone for entry, but you also take profit on H4. You also take profit on H4. You know where you take profit at. We did take profit like this one as a take profit. So now let's look at timing and scales. You know what? When you have a zone on H4, for example, when you have a zone on H4, for example, this one, let us take this zone as H4 zone. Um, if you want to enter, if you want to enter, like for timing, you need to go on H1, and on H1 you can have even three in terms of number of entry. You can have 3 entry per day. For example, that was a zone on H4, and then you want to have a bit, you want to enter on H4, right? I want to explain to you timing now. Let us say you want to enter here on H4. In this Kijun H4, you need to time to go and have a better timing by waiting Tenkan inverted on a 1 hour like this. This will be your position. But since this position is too big, what you will do, you will go on 15 minutes. You will be timing an earlier entry for the first position, for example, for here. This first Tenkan inverted, this one. That first Tenkan inverted, let us say that this, right? This will be your first position. And the second position, Tenkan inverted, will be this one, right? That will be the position. Now, on 5 minutes, what you're gonna do is look at, can you have a better entry for for example, this big position, you can better time it here a little bit here below. This other one is almost the same thing. You have a timing. So much so that rather than entering far above here or far above here, you come and enter at the bottoms, here. So it gives you a better risk reward. That's what I call timing. So now let me explain to you what I'm saying here. No, before explaining to you what I'm saying here, let me finish explaining to you the timing. The best timing is in the white space of the void of this setups line. What I mean by that is that, right? When you enter, when you want to enter, right? When you want to enter, the best timing to enter on Tenkan inverted here is inside this white space below Tenkan. Because if you don't enter here below Tenkan and you go and enter here above Tenkan, you are making your risk reward too big for the same stop loss, and not that too big, but big enough, big till you feel it. For the same time stop loss and same take profit. For this one, you have 3 as risk reward, but if you enter here, you have 1.5 as risk reward for just a small difference between some candles. So you need to time the space below Tenkan inverted. That's how you time your entry. Timing is very important. Enter in the white space below Tenkan inverted. That's the goal. That's the goal. So on 1 hour, right, you can enter on Tenkan inverted, Kijun inverted, TK cross before the cloud on the first Tenkan touch. On 15 minutes, you can enter on Kijun inverted in the cloud, TK cross before the cloud on the first Tenkan inverted, Tenkan touch. On 5 minutes, you can enter, the best timing will be SSA inverted in the cloud, first touch, or the transition, the KSB or the SSB inverted, or the first two Kijun in 5 minutes. But in 1 minute, the best timing will always be SSA or SSB. Let me tell you why. I wanted to arrive at this point to show you and prove you that 1 minute has a lot of retracement. 1 minute has a lot of retracement. Like the retracement is a little bit cheaper than than and it retraces a lot. And it's very normal. It's very, very normal. Because 1 minute SSB is the Tenkan 5 minutes. For example, um, why am I not seeing my brother? Why 1 minute? Why my 1 minute doesn't have the SS the Ishimoku on this place? Ishimoku just bugged. Anyway, Ishimoku just bugged. Ishimoku doesn't want to go back down. So anyway, what I wanted to just explain is that right, you will realize that even if you do anything, you realize that when you go on 1 minute, right, 1 minute like to touch SSB a lot before going up. And you will see that Tenkan is not like always straight. When you touch Tenkan for the first time, it goes directly to SSB. That's a little bit why I say that the best timing will be the displaced line of Ishimoku. That's what I wanted to say. Now let's look at what's the usefulness of 15 minutes. The usefulness of 15 minutes is that it's a solid early reversal for Tenkan inverted. Like for example, if you want to if you want to take the let us say for example you want to take the reversal. If you take the reversal sell here, right? You take the inverted Tenkan here and you sell here on 15 minutes. But this 15 minutes will be a very good reversal sell. But if you have done it on 5 minutes, you will have start selling on 5 minutes here, and you will have had your stop loss broken. Why? Because the speed on 15 minutes is still to the upside. So the solid reversal, when I say solid reversal, is a reversal when you take that reversal, you are not getting touched by on your stop loss like this when you place the stop loss. Because the goal is not to be right about the direction and then losing the trade. But the goal is to be entering at the at a good timing in that direction. Good timing in that direction, not just having the direction. So so it's better to start finding reversal from 15 minutes with Tenkan inverted, not from 5 minutes, because 5 minutes is not there is no certainty yet. But from 15 minutes and 1 hour is already good to have reversals. It's already good to start having reversal. So now, what is the use of 5 minutes then and 1 minute? The use of 5 minutes and 1 minute are for quick win for first big touch of for a first touch of big zones. Like 5 minutes and 1 minute are for quick wins. Let me show you why it is for quick wins. Let us say, for example, that the price touch this daily setup, right? If you go on 5 minutes to buy this, if you go on 5 minutes, for example, you will see that you can make a quick money by entering very fast and very accurately at this Tenkan inverted just here. Place your stop loss just start here and making just a risk a take profit here at this level. You know why it is a quick win? It is because the daily zone has a lot of power. As soon as the price touch the daily zone, bam, it eject the price. So you need to benefit from that first impulsion. Don't try to hold the trade to start holding the trade for daily two, but just enter in 5 minutes inside this daily zone and just benefit from just the first impulsion till the trade goes uh, um, create another downtrend like this one. And then for the next downtrend, when it touch again the daily zone, you buy again. Then you can decide if you leave this one, go. If you leave this one, keep going to the upside. But I wanted to emphasize on the fact that daily zone, weekly zones, and monthly zone, the first time that the price touches it is a good, very, very good moment for you to go and buy on 15 minutes, on 5 minutes, or 1 minute. You have a quick win, a certain win, because a touch of a line of big zone for sure make the price move to the upside. There is no doubt, there is no discussion about first touch, first move. That's how those zones work. That's why you take actually zones there. So that's all I can tell to you. Let's now go to the time frame skipping theory.